guys, welcome to this video on S-corp tax return preparation. So I'll be talking about tax election, S-corp election. I'll be preparing the tax work paper from financials, and I'll show you how to enter all that information in the tax software. Let's start. If you're new to this channel, my name is Kat, and I have more than 12 years of experience at top CPA companies. I also worked at the Big Four, and I've been self-employed for the last 5 years. So this channel, I'll be talking about different tax topics. I'll teach you how to use tax software, improve your productivity as a tax preparer or reviewer, and also if you want to, I'll teach you how to make money preparing taxes. So please subscribe to my channel for more videos like that. Let's start on the topic. Hello guys, so in this video I just want to I need to prepare the tax return, and I thought that would be helpful for you as well. So we'll prepare S-corporate tax return for first year, as the scenario is. So last year the client filed, let me show you, his 1120, and he included the income from business on his Schedule C. So this was his income. So this is the entity that will be filing S-corp this year. So in 2020 it was a Schedule C. In 2023 the client elected to be S-corp, and so he filed this form 2553, election to be S-corp. So they filled up their name, EIN, the address, they incorporated, state incorporated, and when they want to be S-corp. So here's the date. They chose that they want to be calendar year. So as of this day, they want to be S-corp. And yeah, so pretty much they also failed, as stated why they didn't file it on time. So you can do that. And here on second page, they just explain who is 100% owner, and that person needs to file this form. So anyways, so they send it out, this form, to IRS. Usually you have to do it within, and I'll mention in the video what's the term period you have to do it for. Or you can do it later, but you have to explain why you did it later. So I recommend when we will file first year S-corp tax return to include this in the tax return as attachment, because IRS might have not received that, right? So, all right. So what we will do now? So I'm very excited actually about this, because I finally will have I feel like I'm preparing the tax return with you, so I'm not by myself, and hopefully you feel like you're not on your own too if you're studying how to do it. So usually when we start preparing tax returns, I look at a couple of things. So I usually look at prior year tax return, but because we don't have one, it's a first year S-corp, I'm looking how it was included last year. So this one is was last Schedule C. So I'm kind of just looking, okay, it was a cash basis. There is an entity code for whatever the business, what business category it is. They had gross receipts, they had some cost of goods sold. So I'm kind of looking over like expenses, income, just to get like a vibe to see what they did last year. Yeah, so they also had the cars, they had some business miles. I was like, okay, this is what I should expect. I should expect some income, some cost of goods sold, and expenses similar to advertisement. I mean, car expenses are kind of high, but I think this is those miles, which that's what client said. That's probably what it is. And then other random I'm sorry, not random, but other expenses. Okay, cool. So this is what I will expect this year. Now I'm looking at current year financials. So here is current year financials. So their sales increased dramatically, so which is really good. Then they had advertisement expense, bank charging, contractor space, kind of huge, but well, it's interesting. Then they have dues and subscription, insurance, interest pay. So I do go through each expense just to see if it makes sense, if there is nothing crazy. So meals and entertainment will be 50% deductible, as we all know. I don't see, so I look for penalties, I look for like strange deductions. So like here's a gas expense, which is kind of high. So I need to see if the car used 100% for business or part of it is for business, and also advise the client. Utilities, other income. All right, that's okay by me. Let's look at balance sheet now. So balance sheet, we have some cash. We didn't have any last year. Well, that's fine. Okay, so let me go back to here. Oh, unfortunately or fortunately, because I was trying to see on this, there is a requirement if you have less than 250K in sales or assets, you don't have to file balance sheet. So I was really hoping this would be less than 250K, but it's more. So I have to file balance sheet for this client. Okay, so now I kind of need to really pay attention to balance sheet. So last year they didn't have anything, right? So that's interesting, but I'm sure they had these items before. Well, again, we'll just start that it was 0 because that's what client provided, and I'll get back to them. I was like, hey, I'm starting out, like, was it really 0? Maybe you'll give me the best estimate, right? Or at least, I guess, I'll have to ask them if those things were included, and they probably were because I'm looking at years 2005, 2011, 2017. So I have a feeling it's old assets. So for this video, and I guess that's will be what it is, I'll just assume all this stuff is old, and we'll just probably need to keep depreciating it or maybe not depreciating it. I'll decide as I prepare tax return, right? Also, I have general ledger, so I can get into details, more details for balance sheet, but I'm pretty sure those are from beginning. Okay, cool. So what challenges do I see here? First of all, because it will be an S-corp tax return, they're supposed to issue salaries, right? I don't see wages here. I just see contractors pay. I asked the clients, they said they didn't issue wages, which made me worried. So this is issue number 1 that I see, like, what happened to wages? What do we do with that? Yeah, I don't really enjoy that as much that they didn't issue wages, but I guess it is what it is. So what do I do now? That's a question I need to answer. Then balance sheet, okay, are those assets from last year? What amounts we depreciated? So if I look at prior year tax return, I don't see any depreciation. So I guess that will be my assumption. They haven't depreciated any. This is just assets on their books. Will I appreciate any this year or not? I think I'll start with answer with no, and then ask the client. Okay. And what else? So I think that's pretty much it. And then going back to that S-corp salaries. So here what I communicated to the client, I gave them a couple options, and let me go walk you through them. Sorry, presentation is not the best, but hopefully it works. So I said that no corporation was, no wages were issued, but they were supposed to issue. So what do we do now? So I give them an option that files the way it is without wages. That might raise a red flag to the IRS, so I would not recommend it, but that's for client to decide, right? Then there is a thing we can issue the payroll now and do all this kind of stuff, like backdate them and things like that. I don't really recommend that because, first of all, we're super late, we'll receive lots of notices, so that will create this whole problem. There is also a way, I'm not a big fan of it, but I think it's better than nothing, and it's pretty much issue 1099 from S-corp, enter the wages on individual tax return, and pick it up as an income on Schedule C for a client. So what I meant, like, let's say, let me explain more here. So for S-corp, we issue a salary. We issue like 1099 salary. Included under wages for, what is that? For officers. Expense. So that's now step number 2. Issue 1099. Then we have to pick it up as Schedule C income on individual tax return. Why I don't really like that too, because I mean technically this is not correct. It's just something we can do to make it a little bit better, but then also it's kind of like a little bit like yellowish flag for IRS, because then we didn't pay payroll. Well, if we pick it up as a Schedule C, we actually technically will pay all this Medicare and Social Security on self-employed income on his personal tax return. So if they ever go back to us, we're like, okay, this is not 100% correct, but we tried to pay those Medicare and Social Security taxes by doing this kind of stuff. So anyways, so this is like, but the problem is that there is potential penalties for 1099, and this is not a best approach. Can be a quick fix for 1 year, but we will not do it next year. We need to set up the client on the payroll. Yeah, so I hope all this kind of stuff makes sense. So this is an exciting tax return we're gonna work on together. So I will show you how to use Excel schedule to kind of like create work paper for ourselves, how to look at prior year tax return and get the information from there, and then how to enter it in the tax software. So in this example, I'm going to use Proconnect, but you can do the same in any software you're using. All right, let's start. Alrighty guys, so I just grabbed myself a coffee. I hope you get yourself a drink as well of your choice, because that will be quite a long process. Cheers. So it takes around like, I don't know, like I would say half an hour to an hour to prepare tax returns. So I'll make sure to speed up the process, the periods that are kind of boring for you, like me doing data entry, but please feel free to comment below if you have any questions, right? Alrighty, so what do I do to start the tax return preparation? So what I do, I look at prior year tax return and I look at financials. So for now, I know that the client told me he doesn't want to do this 1099 wages issue kind of process, so I'm just gonna prepare tax return with no wages to the officer. It's not the wages should have been here, but he didn't issued salary. So what do? We just prepare as is and make sure we know tells the clients about the risks, right? So I'm looking at the P&L at first, and I was like, okay, so what do we have? We have sales, we have ads, contractors, insurances, meals and entertainment. So I highlight every expense that is not going to be 100% deductible. So for example, meals and entertainment can be penalties, can be different kind of stuff. Then I'm looking at gas. I was like, oh, wow, so this amount is kind of big for me. And I was like, oh, I don't know if it's 100% deductible or not. So first of all, you need to ask the client, are car expenses that included on P&L are already adjusted and 100% business, or should we adjust them, right? Usually the client includes all of them, and then he tells us, oh, take 80% or whatever. But I was looking at last year's tax return. It looks like it says here that 100% are business use for whatever cars they used, because it seems like they have like a specialized car and they only use it for business. So I think this will be 100% deductible. Uniforms are fine, utilities are good, other income is okay. Okay, so now I'm kind of creating something here that what I want to see on tax return. So this is net income per books. And this one, right? Then we'll have our adjustments. Tax adjustments will be 50% meals and entertainment. So it will be add back. And then we'll have our taxable income. And I'll make sure this tied to my tax return. So I kind of do all the preparation in the Excel, and then when I enter it in tax software, this is what I want to see. I want this to be our taxable income. Then I'm looking at balance sheet, and I kind of do the same. So I can quickly do, it's kind of pretty easy here. So we have assets, will be our cash, will be fixed assets. I will put 0 as depreciation because it doesn't seem like they were depreciated before. And then I'll put this as liability. So kind of like, well, let's see. Here we have net income here, but we have this like strange beginning opening equity, but I think, and so what I need to figure out here, if you had any distributions or contributions this year. If you haven't, I'll just probably will enter it the way it is, and I'll put it as owner's equity beginning balance, whatever it is. So to find out if you had distributions or not, we go to general ledger and we search for this equity account and see if there were any changes or not. So I'll show you in a second how to do it. So I just go to general ledger, our search here for equity. Okay, so here's our equity account. Let's see what happened this year. So reflect beginning balance, reflect loan payment, journal entry, down payment, deposit, stuff like that. So it was some investment. So it seems like some contributions actually happened, right? And then we had some investment personal. So I think this is probably personal account. And that's it. So what it shows me. So 17,000 seems like distributions. And this things seems like contribution. So going back to balance sheet, this will be our contribution, this is our distribution, and this is just miscellaneous. So the equity will look like this. Equity. So basically, we can just we can do contributions. This will be amount, right? And then we'll have distributions. Oops, sorry for me misspelling it. Distributions. And so this would be distributions. So ending balance would be negative 7,022, and this is ties to this amount. But so basically we can just net them out and call it net distributions. Net distributions. So when we prepare our retained earnings would look like, let me show you. So it will be okay, retained earnings. It would be 2023 book income, which is this amount. Then we'll have net distributions, also 2023. And then, so the ending retained earnings will be this amount that, let me see, so investments, distributions. Well, so it's technically should tie to this amount, total equity. So let me take a look, what am I doing wrong? Maybe just the signs are not correct. So let's remember, equity is a credit, has a credit balance, right? So whatever is negative is debit, and whatever is positive in here is credit, right? So I guess for us it will be opposite. Oh, you know what? I know what I did wrong. So I think our profit is loss is 39,000, and then they took out 7. Okay, distributions, expenses. Okay, I guess my bad. Let me see. Is 32,000? Yes. So we should have 7,022 as net distributions, and we have a different because my formula is off. Oh, I'm so glad when I found it, when I found mistakes. So instead of like do a summary of those numbers, I just kind of did. So whoever was watching it and saw it, I mean, good job, good job. I'm sorry for that. So now we have distributions in this amount, and our ending return earnings would be this guy, right? And it ties to our ending retained earnings per books. Awesome. So pretty much I set up myself what I want to see on the books. So my balance sheet also would look like this. Assets. Then I have fixed assets. Then I'll have total assets, right? So my assets would be, I'm sorry, would be like, cash. So current assets, what I meant is like cash. So for cash, I would have this amount. For fixed assets, this is what I want to see. So total assets would be this amount. And then when we go here, we'll have long-term liabilities of amount of this guy. Then we'll have equity. That will be this amount. And supposedly total liabilities and total assets should equal, let me show you, those two amounts should equal, right? This is the law of the tax, of accounting, and they do. So this is what I want to see on balance sheet. And I have a retained earnings summarized here. My book income on schedule M1, M2 should tie to this guy, and then my book income to taxable income should be like this. Alright, so hope it made sense. Now we're switching to the tax software, and I'm going to show you how to enter in the tax software and how to reconcile it. Like I said, I will use a Proconnect example as example for this lesson, but again, you can do it in any tax software. It makes sense the flow makes sense everywhere, right? So check it out. Thank you for watching my video. Just a quick interruption. I'm sorry. Just to tell you that I do sell online courses. So if you go to my website, remotecpanla.com, it will give you more information about online courses that I sell and what I teach, and with more information about me, agenda, on what we do. We have a weekly calls. We go over the different kind of issues or problems we can have in a tax software. So in the end of this 1 month course, you'll be able to prepare like a complex tax return in any tax software you choose. Thank you again. Please continue watching my video. Make sure you got up, moved a little bit, did some exercises, stretches, and now we can continue. So you'll see, I actually have this reminder on my desktop that reminds me to move every half an hour. So I'll be your reminder as well for this video. Alrighty. So now we have our Excel workpaper right here. We have Proconnect on the left. And we'll start. So we need to enter profit and loss, right? So we go, any software you use, you go to income and expenses, and we'll just start entering them. So let's do it. And so for example, here I go under ordinary income, and I start entering stuff. Also, before I do that, I'm kind of curious what they entered last year, right? And how they entered. So I'll go back to that Schedule C, and I see they had some cost of goods sold, and I'm really curious what it was. So it was materials and supplies, and we have it here as well. So that will be our cost of goods sold. Let's see if you have anything else that can be cost of goods sold. So cost of goods sold is usually something like related to this sale. I mean, contractors can be a cost of goods sold, but again, I don't know exactly what was related to sales, selling actual product, and what was related to anything else. So ask the client if any to be allocated to cost of goods sold. And again, for example, so this client is in take a break. Guys, get up, take a break. I'm gonna wait for you, do some stretches, and then let's continue. So we should ask cost of goods sold. So basically the idea is like if they sell the trees, what contractors' payments were related to selling the trees, not overhead. So for example, accounting fees, management fees are overhead, but somebody like trying to trim the trees, delivering the trees, that's part of cost of goods sold, right? So let's see what else can be here. Insurance, that's not. I'm not sure about all these expenses. Doesn't look to me they are part of goods sold. So for now, I'm just gonna include job supplies. And what else is interesting here? I think everything else is all right? Well, they have some supplies here as well. So I'm not also sure if all of them are cost of goods sold. So maybe also ask if all cost of goods sold. So that's a question we should ask the client. Alright guys, so now I'm gonna enter all of this stuff in the tax return, and in the end what I want to see is I want this to tie the first page of 1120S taxable income tied to this number. So I'm going to speed up this part so it's more interesting for you to watch, and yeah, I'll see you in a minute. Well, if you're continuing and following me and entering this this numbers, let me know if you have any questions. I'll see you in a second. So as you guys see, like here's my schedule in one. So for some reason I'm off, and maybe while you were watching it, you can actually see why. So in any case, so this is the number I'm looking for to be here, and instead it's 48,913. So I'm off 2,085. I'm not exactly sure why, so I'm gonna go back and double check each number to see what I missed. Because for now, I don't really see it. Sorry, I just double checked. So I think I'm missing one. So my income is higher. So it seems like I'm missing some expenses. So I'm just gonna take a look, and I'll be back in a second with resolution. See you soon. I actually found a mistake when I was just comparing this first page. So you see right here, I have 15,137 as cost of goods sold. So I accidentally took meals and entertainment because I highlighted it, but what I should have done is to take job supplies, right? So the difference is actually my difference that I'm looking for. So let me go and update that. You see, everybody makes mistakes. Even I did those tax returns for many, many years, and still sometimes I'm missing something like silly like this. But that's why we need work papers, and that's why they're super helpful. Alrighty, so now it should be fine. That's why Excel work paper and tying to somebody is the key of preparing tax return without any errors, right? So here we go now, and we have 46,828 as a taxable income, perfect. And now I'm gonna go to this schedule. So here I should have book income, right here. Book income ties to this amount, which is here. Then we have adjustment, which is meals and entertainment, 50%. And here we go, we have the taxable income. So this is our Schedule M1. And this is why we do it. All right, so now let's go to next step would be balance sheet, reconcile balance sheet, right? So we go here, or whatever, like in your tax software, it can be a little bit different, but the idea is the same. So let's start. So we assumed the beginning was 0 for everything, and then here's our amount. So I'm just copying it over. So this software doesn't like the $sign, so I have to delete it. We have fixed assets. So because we haven't depreciated them, I'm just going to enter them as one number. So we have this depreciable assets. And I'll talk to the client if they want to depreciate, if they ever have done. I don't think they did because they incorporated in 2022, I think. It doesn't say here, but here is like, I think that's what it is. Oops, doesn't say it here, but I remember it was 2022. So last year they incorporated, I didn't see depreciation schedule and Schedule C or prior, which is prior year tax return. So I'll ask if they want to do it or not. So this is it, and then we have long-term liabilities, other current liabilities. They said it's what? Long-term liabilities. So I think it's more like notes payable. Long-term liabilities. And we need to enter our distributions. Oh, so sorry for misspelling this. Net distributions. So, okay, let's take a look at our balance sheet right now. We're almost there. There is certain things we need to make better, but I'll show you in a second. So, all right, so let's go. So we have go to balance sheet, and it's a little bit off because we have to enter distributions, but this looks good, right? So we have 78,271 as total assets. Yes. So a few ways to enter distributions. So I always go in a different tax software, no matter which one I work on. I just work like go here and go under like distributions, or also, which is, let me see, or also another way to do it. I know it goes under Schedule K, line 16D. So I just go here, property distributions. And I'm looking where to enter distributions here. Distributions cash, and this is my amount, right? I have only one shareholder, so I don't have to worry about whose distributions are those, but that's important when you have more than one shareholders. So you have to make sure those are distributions for that person. So after we enter distributions, they show up in a few places. So first of all, Schedule K right here, right? Distributions. And now our balance sheet reconcile because we added distributions. That's really awesome. So here, and they also show up right here, right? And so this is our like accumulated adjustment, which is kind of, it was very similar to retained earnings. And for make it simple, I'll just call it retained earnings for this tax return. And that should tie to our amount right here and right here. Okay, so this is beautiful. It's actually, I think we're done. Well, I have to clear diagnostics, and I'll show you, like, I need to add shareholder, right? The name, what's the percentage of ownership they have. Business code is missing. So business code is something we can get from last year's tax returns or ask the client. So in this case, this is our business code. And then business activity, I actually need to write down what they do. So 3 service, right? Business activity, and that will be service. If they sell a product, we would do product. How much they own, so I would need to add shareholder, add percentage, the address, of course, that makes sense. Principal place in business, sure, I'll include the state. And then All this kind of stuff we need to fix for diagnostics. But we are actually done. I mean, our tax return looks beautiful. We tied it to the tax return. So as a summary, let's discuss what we just done. So we did what? We looked at prior year tax return. We prepared our workbook. Workbook means something that we tied to the tax return. And that's important, so we know where we should be heading with the tax return, right? And so basically, we started with P&L, figured out what our taxable income is, and then we're entering this information in the tax return. Then we did balance sheet. So I did the summary, and this is what I was expecting to see in the tax return. Also figured out distributions. Enter that in a tax software. Make sure the taxable income here ties. Enter distributions, enter balance sheet, make sure they tie to those numbers. And also important to review Schedule M1, Schedule M2, because those are important items. Schedule M1, reconciliation from book income to taxable income, and Schedule M2 is more like retained earnings kind of stuff, just like for general understanding. Well, thank you so much, guys, and hope you enjoyed this video. And I'll recommend you another video right here, and I'll talk to you soon in the next video, and good job, good job. I will record more videos on this topic, so please subscribe to my channel and turn on your notifications so you get notified when the new video comes up. Also, sometime end of July, I'm planning to record online course on how to start tax preparation business. So where I will talk about how to land your dream clients, how to do sales, landing pages, how to run ads, and also how to set you up, getting all these registrations you need, how to choose a tax software, how to use a tax software. I'll teach you the basic of tax preparation and how to run the tax preparation business. So please go to my website, Remote CPA in LA, and sign up to my email list for updates about this new programs that are coming up, and also weekly news about like useful tips, how to start your online tax preparation business. I'm excited. I also would recommend you to watch this video on onboarding the tax client and how to get your dream clients. I think that would be very useful for you. I'll see you in the next video, and I believe in you. You can do it, and you deserve to get a lifestyle of your dreams and make money preparing taxes. Let's do it together. See you in the next video. Bye bye.